Hello and welcome. This is View from the Top. I am Modele Sharafa Yusuf and I thank you for tuning in today. The Nigerian banking landscape continues to face significant headwinds on its bottom line, and the gap between the top and lowest ranked banks in the retail segment has continued to narrow, clearly an indication of the very competitive environment in which Nigerian banks now operate. Experts say the greatest opportunity to grow revenue will not come from just new markets or products, but rather from the ability to deliver a high quality and differentiated customer experience. Regulation continues to shape how banking works, but customers are now the driving force of the retail revolution. The ever-growing use of mobile phones and tablets is replacing counter staff, the local branch manager, and the call center. Established in 1894, First Bank is Nigeria's premier banking institution. It is said to be the #1 bank in total gross earnings, total assets, total loans, and total deposits, and has about 10 million customers out of Nigeria's 30 or so million customers. First Bank Group MD and CEO Mr. Bisi Onasanya is my guest on View from the Top today, and I want to thank him very much. Thank you very much for joining us, sir.
My pleasure. Thank you.
Let's quickly get you acquainted with Mr. Onasanya before we settle down to our conversation. Stephen Olabisi Onasanya was born on August 18, 1961. Mr. Onasanya started his banking career as senior accountant with Burma Bank in 1985. He joined First Bank in 1994 as a senior manager and held several positions including DGM and Group Head Finance and Performance Management Department and MD of First Pension Custodian, a First Bank subsidiary. He was Executive Director of Banking Operations and Services before his appointment as First Bank Group MD in 2009. Experts say business models and the economics of banking will be turned upside down by 2020. What do you foresee?
If you look at banking services, banking customers, and the products in the past 10-15 years, and compare with what you have today, it's completely different. So to that extent, I would say if you say turned upside down, I would imagine, yes, it's been. And what has changed? First and foremost, with the advent of ICT, the platform on which products are served has become much more enhanced, has become much more sophisticated. In addition to that, the customers also have changed. The demands have also changed. These are customers that want to bank in the comforts of their own zones, either in their homes, on their mobiles. And mobile has changed everything, whether we like it or not, and we need to understand that. So to that extent, even traditional banks have been forced to look at things from completely different perspectives and take banking to the customers as against when customers used to chase banks. Platforms, products, offerings have changed. The profile of customers has also changed. And to that extent, banks, including First Bank, we've been forced to make sure that we are on top of our game at all times. About
44% of retail banking customers are said to be between 21 and 30, and a further 32% said to be between 31 and 40 years old. The youth demographic is therefore about 76%. How does one keep a 120-year-old bank relevant to the youth demographic?
First and foremost, we needed to make our institution, both as a corporate body and the people, ready for the demands of tomorrow. As it were, that tomorrow, as we envisaged at that point in time, has come today. And that will also be tomorrow that we are preparing for today. That meant we needed to transform our branches in a manner that it would appeal to that new generation. Modernization of the branch network was very important. We also have to be very careful in making sure that the profile of our workforce match the profile of the people that will serve the customers that we're talking about, the tech-savvy customers. So apart from modernization of the environment and the infrastructures, improving our ICT infrastructures, making the branches much more convenient for people but more importantly, also looking at our people and making sure that we have the young and upwardly mobile, attractive, but brilliant and intelligent young men and women to be able to serve the needs of the customers, their own generation. And we did all of this without also losing the focus or the fact that we still appeal to the older generation. So there was this delicate balance we needed to strike between appealing to the youthful segment of the market and yet holding on to the traditional strength of the institution.
You know, First Bank operates an extensive distribution network with about 800 branches nationwide. Is bigger necessarily better?
Like in everything in life, it's not good to be small. However, there has to be a delicate balance between size and efficiency. So I would say it's not good to be small. However, when you grow in size, you must be sure that the complexities that come with size, you have the necessary enablers to deal with them. So there are what I call pillars that you need to strengthen as you grow in size. And we've seen that some banks have tried to copy what First Bank is by trying to be big. But believe you me, they are also understanding today how difficult it is to manage complex and big institutions. It's a difficult question to answer. It's nice to be big, but you should never, ever sacrifice efficiency at the expense of your size. And that's one thing that First Bank has been able to do that other banks are struggling to get.
As we've just established now, there has been significant branch network expansion that has taken place over the past decade. But this has had little impact on financial inclusion, and only about 20 to 30% of the population is still said to be banked. Why does this continue to be the case?
I would not say that it has not had, it doesn't have impact on financial inclusion. I think I disagree with you. The bit that we've been able to take into the financial system, or into the financial system, yes, by the activities that we've done, they've been taken out of the financial exclusion stage, whether you like it or not. However, is it enough? I would say that we still have a lot to do. However, if First Bank has done what I have explained to you, and I will explain to you, we brought in mobile banking. So if you load the number of Nigerians that have mobile phones today, if all of them take advantage of our mobile banking platform, that means that virtually everybody that has a mobile phone has access to banking system. That's financial inclusion. It's a different thing if they take advantage of it, or if they're empowered enough financially to be able to recognize those products and services and take advantage. If with 800 branches, is the biggest bank in Nigeria today. If every other bank has attempted to do what First Bank has done, the financial inclusion they were talking about will be wider than we have today. But the reality also is that it's expensive to run big branches, big network of branches, in an environment where there are no infrastructures. In every branch, you provide your electricity, you provide your water, you provide your security. It's expensive. So what do you see? You see banks running away from developing and establishing branches simply because they don't want to carry the burden of those things.
We must take a break now. We ask that you please join us again after this very short break.